Good afternoon, ladies and gentlemen. I'd like to welcome you to a video conference call for analysts and investors on earnings of TAURON Group for the first quarter of 2020. The hosts of today's meetings are Mr. Filip Grzegorczyk, the CEO of TAURON Polska Energia, and Mr. Marek Wadowski, the CFO of TAURON Polska Energia. My name is Marcin Lauer. I'm working for Investor Relations team. The presentation will be conducted in Polish and simultaneously interpreted into English. Outside of the broadcast, you can also listen in to today's meeting via a conference call mode. I'd like to invite you to ask questions using the form available on the website of the broadcast. Due to the GPRD regulations, we will not be providing your contact details, but we can provide the name of institutions that you represent if you enter this information in the content of your question. Mr. President, please start the presentation. Thank you very much. Good afternoon, ladies and gentlemen. We'd like to welcome you very cordially. We have a pleasure to present to you the financial results and operating results achieved by TAURON Group in the first quarter of 2020. To start with, I'd like to emphasize that TAURON Group, we have been following closely and stringently the epidemiological guidelines and orders. We are complying with the current situation. What's very important, all the subsidiaries of our group are working without any problems. We want to continue to operate in an uninterrupted way, and so we are conducting ongoing activities aimed at protecting the 26,000 employees of TAURON Group. We are also undertaking initiatives that are limiting the negative implications of the pandemic for the group's finance. Between May and July, the workforce of TAURON Wydobycie, TAURON Mining segment will be working 4 days a week, and their wages will be reduced by 20% during that period. Yesterday, we signed an agreement, a similar agreement, at TAURON Generation subsidiary. The employees of the subsidiary, starting from May to July, will have a reduced work time down to 90% and pro rata reduced wages. These activities will allow us to apply for the funds related to the employment protection funds as part of the anti-crisis shield package. We should, however, emphasize that the COVID-19 situation is very dynamic, very fast changing, and it can evolve in a different way that we can foresee. The management board of a company is on an ongoing basis monitoring the potential impact and will undertake any possible steps to mitigate the negative implications of COVID-19 on TAURON Group. After this brief introduction forced by the epidemiological situation, I would like to present to you the group's financial situation. I will describe the highlights of our group in Q1 and the capex of group, investments of group, whereas the CFO, Mr. Marek Wadowski, will describe the market and financial situation, economic situation, will present also the detailed financial results broken down into individual segments. Additionally, Mr. Wadowski will also present the outlook for 2020 for our group. Ladies and gentlemen, let's move on to the key data for the first quarter of 2020. First of all, one needs to emphasize that in Q1, our group posted good financial results that at EBITDA level were in line with the market expectations, the analyst expectations. Moving on to the data that you can see on the slide, one must say that in the first quarter of 2020, the sales revenue went up year-over-year by 3%, reaching almost 5.5 billion PLN. The increase of sales revenue was driven, first of all, by the higher rates for the distribution services. The group posted almost 960 million EBITDA, However, it was charged with a one-off event worth 120 million PLN. The impact of this event on the earnings will be presented by the CFO, Mr. Marek Wadowski, when presenting subsequent slides. Furthermore, the group posted 162 million of net profit. This was impacted by the negative FX differences in the amount of more than 200 million PLN. The CAPEX came in at 940 million and they were 29% higher. This change was due to an increase of CAPEX in the generation distribution segments. The net debt to EBITDA ratio, calculated excluding the debt due to subordinate debt issued as of the end of March 2020, achieved 3.27. The details on the financing and debt will be presented later on in the presentation by the CFO, Mr. Marek Wadowski. If we will look now at the operating data, one should emphasize that in Q1 2020, TAURON Group provided in total 13.25 terawatt-hours of electricity. We have observed a decline of electricity consumption in all groups, customer groups, except for households. Due to the fact that the green turn of TAURON is picking up steam and is becoming more and more important for the group's finances, we have decided to separate in our financial statements the renewable energy sources segment. Let me emphasize, in the first quarter of 2020, we generated 48% more electricity from renewable energy sources. Such a strong growth was due to the acquisition in September 2019 of 5 wind farms with a total capacity of 180 megawatts and the favorable wind conditions. During the period under review, TAURON Group produced more than 2.6 terawatt-hours of electricity using hard coal-fired units. The production volume was impacted by the overhaul works performed on several 200-megawatt units conducted due to the adaptation to the so-called BAT conclusions requirements, as well as the weather conditions that occurred during this period. On the other hand, the heat generation supply went up by 4% versus the first quarter of 2019. The commercial coal production came in at almost 1.2 million tons, which was a positive result of the earlier implemented optimization steps. It's worth mentioning that 54% of generation segment subsidiaries for coal was satisfied with coal coming from TAURON Group's coal mines. By the end of July of this year, the extraction output will be limited due to the introduction of a 4-day work week at our coal mines that I have just mentioned. Ladies and gentlemen, on the next slide, we are providing the summary of the highlights that occurred in Q1, a number of important events that have taken place this year. Namely, in the first quarter, despite the spreading coronavirus pandemic, TAURON Group obtained successfully external financing. During that period, we signed loan agreements worth 1 billion PLN in total, and this amount will be used to finance the general corporate purposes, excluding the financing of the coal assets. An important element of the financing for the green turn of TAURON was the signing of an agreement with the Polish Development Fund, which is related to joint investments in renewable energy sources, first of all in onshore wind farms and solar farms. I am very happy to see that we managed to reach an agreement with the workforce with respect to reducing the work time at TAURON Mining and TAURON Generation. This will allow us to adjust the production of the mining segment to the market conditions and the reduced demand for coal on the market. Let me also mention that we signed an agreement with a consortium of Rafako Mostosol Warszawa, according to which the commissioning of the Jaworzno power generating unit should take place by November 15 this year. Let me now hand over to Mr. Wadowski. Ladies and gentlemen, in the first quarter of this year, we were dealing with less and less favorable, more and more adverse macroeconomic situation, and if you add to that the pandemic, as we see at the slide that you can see, the PMI dropped below 50 points, which clearly indicates a worsening outlook, the decline of electricity consumption, domestic electricity consumption, more than 2 percentage points. The decline of electricity production is 4.6%. It is worth noting the fact that in the first quarter of 2020, the production of electricity from coal-fired units, both lignite and hard coal, dropped. The total share of coal-fired generation in the first quarter is below 70%. The market situation also was less favorable than last year. The falling prices, and as the prices were falling, also the margin was dropping, namely the clean dark spread. The increase of revenue in the first quarter of 2020 was primarily driven by the increase of electricity sales price as well as an increase of distribution tariff. Let me remind you that in the first quarter of 2019, the distribution tariff was still the 2018 tariff because the 2019 tariff was approved at the beginning of April 2019. Looking at EBITDA, if we exclude the one-off events, this result in Q1 2020 was lower by 12%. The net profit was significantly lower. The main reasons being of the lower net profit was the lower EBITDA, which I will further on elaborate, and the negative FX differences, minus 230 million PLN, which was primarily due to the valuation of the debt denominated in euro. We are showing now to you on the slide the results of the 5 segments, including the new renewable segment. This is how we'll be reporting our result due to the greater transparency of our presentation. It is worth noting that the distribution segment still continues to be the most material segment in terms of EBITDA. More than 70% EBITDA in Q1 22 came from that segment. The EBITDA during the period under discussion was impacted to the largest extent by 2 segments: the renewable energy sources, positive impact, and the generation segment had a negative impact. Moving on to the distribution segment, in Q1, as I mentioned, of 2020, we are comparing the distribution service rate versus, as a matter of fact, the 2018 rate for distribution services. Therefore, a significant improvement of EBITDA due to the distribution service sales price. The volume was lower 2 percentage points in Q1 year over year. Here, in Q1, we didn't really have a full effect of the pandemic visible. Looking at April 2020 versus April 2019, when you have the entire period covered by the pandemic, the decline of the volume of electricity distributed is 11%. In Group B, 23%, in Group C, 17%, in Group A, 4%, and we are estimating, because we don't have detailed information for the other groups, we are estimating the increase of the distributed electricity in the G group would be around 5%. The quality parameters of the distribution segment, they comply with the requirements of the President of Energy Regulatory Office, and because of those parameters, we are not expecting the tariff to be adjusted in the subsequent periods. The new segment, renewable renewables and renewable energy sources is displaying a significant impact of increase of EBITDA. This is the result, first of all, by the result of the acquisition of wind farms with a total capacity of 180 megawatts at the end of 2019. Increase of production in this segment from wind is 112%. Had we not had those new wind farms, the increase of production from wind would be around 12%. The hydroelectric power plants, we can see that the electricity production dropped by 17%. In the generation segment, first of all, one should note a one-off event. This is the swap of CO2 emission allowances purchase contracts. The total result on this transaction is 127 million PLN. The value of this transaction is 720 million PLN. The impact on the result is applicable to Q1. In the subsequent quarters, this impact will be reversed, will be getting reversed. Namely, the swap of the CO2 emission allowances was involved the swap of the hedging contracts to the contracts signed with the financial institutions, so the OTC contracts, which led to the settlement of the transaction at the current prices, which led to this result because the hedging contracts for the CO2 emission allowances purchases were at a higher level than the amount that we settled the transaction at. However, those contracts that were signed with the financing institutions are contracts at the lower levels. Therefore, the cost of purchasing the CO2 emission allowances in the subsequent periods of 2020 will be, because of that, lower. We are estimating that the reversal of this negative result in 2020 will be in the region of between 50 and 70 million PLN. It's also worth noting that in the generation segment in 2020, we do not have new Jaworzno yet, namely the generating unit that will be commissioned in the middle of November is not generating positive EBITDA in Q1. In order to mitigate this lack of a shortcoming of EBITDA because of the non-operation of this unit, we are repurchasing electricity, and the results on the repurchased electricity is being shown in the supply segment, which I will elaborate on in a moment. The negative impact of the marginal electricity on coal-fired units was a consequence of two factors. The first factor being the decline of the clean-dark spread, mainly caused by the increase of the prices of the CO2 emission allowances. The other factor was the drop of the production volume, mainly on the 200 megawatt units, and this decline in the volume production was mainly due to the overhauls because of the adaptation of BAT conclusions, adaptation, and of course the market situation. Moving on to the next segment, the supply segment. As I mentioned before, in this segment, we are showing the margin generated from the result on the transaction of repurchasing of electricity. The total impact on the result in Q1 is more than 100 million PLN. Thanks to that, the consolidated EBITDA, the lack of generation from the 910 megawatt unit in Jaworzno didn't have an impact upon the EBITDA in Q1. We are expecting that in the subsequent months, up to November inclusive, we will be able to a large extent to mitigate the negative impact of a lack of production from that unit. In the supply segment, it's also worth noting that we had a positive impact coming from the following factor of price and the volume. This is primarily the consequence outside of the G tariff, where the prices went up in a way that did not fully cover the cost of purchasing electricity. However, In the other segments, I mean here the business segments, in the other segments the price is higher, and this price covers for us the cost of purchasing electricity. Therefore, this is the reason for an increase of EBITDA. But as I mentioned before, out of 139 million PLN that we are showing on the slide, more than 100 million PLN is the result of the repurchases performed on the 910 megawatt unit. In the mining segment now, in Q1, we generated a bit higher EBITDA, despite the fact that the volume of coal sold dropped. However, the mining segment is operating in such a way that if sales decline, the inventory levels go up. Let me remind you that the inventory levels versus the end of Q1 2019 went up significantly, and some of the costs is going into the inventory. That's where we are showing it in this bar other, as a consequence of higher inventory, coal inventory levels. Once the coal is sold, then those costs will be shown in the profit and loss statement. This is, of course, the result of applying the principle of accounting of a relationship between costs and revenue. Comparing the first quarter of 2020 to Q4 2019, we can see the results of the actions taken. We can see an increase of the extraction output. The main factor which now makes this output not beyond the level that we would like it to be are the problem with selling coal. The problem due to the lower demand among the coal-fired units for hard coal. As the CEO mentioned, we are reducing the production. Now the coal mines are operating 4 days a week, and this is the main factor that's limiting the increase of production now. At the end of March 2020, the available financing of TAURON is almost 1.6 billion PLN. The net debt to EBITDA ratio is 2.37. Partly, this ratio is the result of a one-off event that I mentioned before, namely the settlement of a contract for the purchase of CO2 emission allowances. The result generated will be getting reversed over subsequent periods. Therefore, it will have a positive impact upon this leverage ratio later on this year. We are working on reducing this leverage ratio. As of now, we don't have any information about specific effects of our actions. Once such effects appear, we will, of course, provide appropriate information in accordance with the practice up to now. Let me hand over now the floor to Mr. President. Thank you very much. Ladies and gentlemen, a few words about the capital expenditures and the work progress on the key projects. Namely, the largest project that TAURON Group is implementing right now is the construction of a 910 megawatt unit at Jaworzno. The construction of that unit, as I mentioned before, its commissioning should take place by November 15th this year. Current work progress at construction site is more than 98%. The next important project is the construction of a CCGT unit at Stalowa Wola. The installation of steam piping has been completed, the auxiliary installations have been completed, and the other balance of plant systems were completed. The test pressure of a new cooling water ducting was completed. On March 4, the first synchronization of gas turbine was completed, and the unit should be commissioned in this quarter, during this quarter. On this slide, you can also see the project involving implementing heat production at the 460 megawatt unit at Łagisza and the construction of picking and boilers. This investment project is completed with respect to implementing heat production, while the final installations, erections, and assemblies are taking place at the backup boilers, and the handover, the commissioning of a boiler house for operation is planned in Q2. The final item presented on the slide are investments related to the adaptation of TAURON generating units to the work conditions in force past 2021 in order to comply with the BAT conclusions. By the end of Q1, we spent 75 million PLN on this project. If we look at CapEx broken down to segments, one should mention that the CapEx of TAURON in the first quarter of 2020 came in at 940 million PLN. Traditionally, the biggest CapEx was spent on upgrading the grid assets and connecting new customers to the distribution grid. The CapEx in the distribution segment came in at 485 million PLN. The CapEx in the generation segment clocked in at 361 million PLN, with almost 120 million PLN spent on the implementation of Jaworzno generation unit. In the mining segment, we continued the construction of a Grzegorz shaft at Sobieskie coal mine, the investment program at Brzeszcze coal mine, and the construction of a 800-meter level at Janina coal mine. In this segment, our CapEx came in at 60 million PLN. It's also worth mentioning that from the moment that COVID-19 virus started spreading in our country, we are taking actions aimed at reducing the CapEx in the subsequent periods. Therefore, we introduced limits on CapEx spending, and on an ongoing basis, we are reviewing the weight, the importance of each investment project. Ladies and gentlemen, I'd like to finish the discussion of my part of the presentation. The final slide showing the outlook for 2020, our business outlook for 2020 will be presented by the CFO, Mr. Wadowski. Following that, we will be happy to answer your questions. Please, Mr. President. On this slide, we are presenting to the outlook, a bit the outlook for 2020. I would like to emphasize that the situation we are dealing with now is a situation, an unprecedented situation, and to a large extent unpredictable. Its further evolution is unpredictable in the subsequent quarters. Our views are based on the best of our knowledge as of today, but this is subject to change if the situation in our environment changes. I'm presenting the outlook broken down into 5 segments. In the distribution, we are expecting in 2020 a decline, a EBITDA to decline. This is the consequence of 2 factors: a lower volume of electricity delivered. We are not expecting such big declines for the whole year as in April, as I mentioned, 11% drop. However, the volume of electricity delivered in 2020 will be lower, most likely, than in 2019. And also the second factor, very important, the weighted average cost of capital in 2020 is lower than in 2019. In the renewable energy sources segment, we are expecting EBITDA to rise. However, I'd like to note that one should take into account that fact that in 2019 we are dealing with a one-off event in this segment, namely the result on the opportunistic acquisition of 180 megawatts acquisition of wind farms, and it had a 120 million PLN positive impact on EBITDA. If we exclude this factor from 2019, we would expect EBITDA to rise, primarily due to the significant increase of the volume of electricity produced by the wind farms, which is primarily the effect of the acquisition of the wind farms, as well as the assumed favorable wind conditions that throughout 2020. Also, factors that will be stopping this growth will be the market situation, namely the lower electricity prices, as well as worse hydrological conditions. In the generation segment, we are expecting a significant, strong slump of EBITDA, which will be primarily driven by the decline of EBITDA or a lack of EBITDA being generated by the 910 megawatt unit until the moment it is put into operation. We were assuming this EBITDA will have a positive impact on the result of the segment. However, at least until the middle of November, we will likely not have this EBITDA generated by the Jaworzno unit, by the new unit, and also expecting difficult market conditions throughout 2020 due to the high electricity imports. The electricity imports in the first quarter 2020 versus the same period of last year was 60% up versus 2019. And let me remind you that 2019 also had a higher electricity imports versus 2018. And we're expecting also later on during the year that the demand for electricity will be declining. Therefore, to sum up, in this segment, generation segment, we should observe a significant slump of EBITDA. In the supply segment, we expect EBITDA to rise, and this is the other way around versus generation segment. Since using market situation, we are mitigating the impact of lack of EBITDA from the 910 megawatt unit in Jaworzno. We are showing this result in the supply segment. Therefore, this action will have a positive impact upon the supply segment. If we look at the entire capital group at the consolidated level, we are expecting that the commissioning of this unit at a later date than originally assumed will not cause a significant decline of EBITDA. This will be, to a large extent, compensated, maybe even fully compensated by the trading operations. The market situation definitely is highly supportive of such actions. In the other elements, the supply segment is facing a number of challenges, including the risk of an increase of write-offs due to overdue accounts payable. Originally, we were assuming this risk to be higher. Now, this risk, we are monitoring all the time, this risk, but it's worth indicating that we are not treating this risk as a very significant risk at this point in time. Of course, it's hard for us to foresee how will the situation progress later during the year. In the mining segment, we're expecting EBITDA to rise. The main reducing limitation factor is the demand for hard coal. If had the demand not dropped, definitely we would have observed a very strong increase of EBITDA in the mining segment. But still, the effects of efficiency improvements that we made last year will be visible in the segment. The CapEx, we are adjusting CapEx on an ongoing basis to our financial position. The net debt to EBITDA ratio is the main element that we take into account when determining the CapEx level, and this is what we'll continue to do in 2020. That's all from us. Thank you very much for listening to our presentation. Let's move on now to the Q&A question. Thank you very much to the presidents for the presentation. During this part, questions and answers will have, as usual, our experts available. Mr. Dariusz Niemiec, the Managing Director for Trading, Mr. Ron Makieła, the Director for Controlling, and Mr. Sebastian Gola, the Executive Director for Analysis. We have a series of 5 questions from the Société Générale analyst, 5 issues he's raising. I suggest that we answer them one by one. The first issue: what are the effects of the up to now discussions with the regulator on the upcoming regulatory period, especially because of declining WACC, the decline of around 4% in 2020 as you look at the 10-year-old bills. This may lead to the reduction of CapEx in the distribution and also the write-offs on or impairment charges on assets. The effects of the talks to the regulator, we don't have any effects as of now. That's true that the declining WACC, weighted average cost of capital, will be a challenge in 2021 in the distribution segment. Of course, on our side, we'll be trying to convince the regulator to modify its approach. Let me be frank, that the decline of WACC, as indicated in the question, 4%, definitely will lead to a decrease of EBITDA and definitely may cause the need to perform impairment tests, conduct impairment tests, or even book some write-downs. But as of now, it's difficult for me to predetermine what will be the final situation. It's the middle of May, still have some more time left. So we can see those challenges, and of course we will try to make the situation related to the decline of interest rates and the bond interest rates that are taken into account into weighted average cost of capital. We will try to make the regulator take that into account in his approach, but it's too early to indicate any effects yet. Thank you. The next issue, because of the increases of September 2019, what should we expect the cost of wages to increase in 2020? Please indicate the level in millions of PLN. I'd like to ask Mr. Director Roland Makieła to answer this question, please. The overall impact of last year's agreement signed will be between 3.5% and 4% of the overall wages level, including the benefits. However, one should remember that the agreement came into force starting as of September last year. Therefore, this year, 2020, this effect will be relatively accordingly lower and will be around 2.5% as an increase of the total wages pool and wages and benefits. Thank you. The next question. The unassigned items and exclusions generated a EBITDA loss of 101.5 million PLN versus 20.7 million PLN in Q1 2019. Why such a big increase? That's the analyst questions. I will also ask Mr. Roland Makieła to answer this question, please. The issue of a difference in the unassigned items segment is an effect of evaluation of a coal produced by TAURON mining segment, the valuation of a coal that is held as an inventory at TAURON generation, TAURON heat segments. One must say that last year in 2019, this cost was very high, relatively high, let's put it this way. And therefore, it mitigated the profit and loss statement. Here, this year, this cost is lower, so we have a reverse trend. Therefore, the entire difference comes from that. Thank you. The next question is related to the mining segment. On the EBITDA bridge, the other items was 62 million PLN, increasing EBITDA. What is that amount to be exact? This is the increase of the inventory levels in the generation segment. As I mentioned before, the increase of the inventory level means that costs are being activated this way. Those costs will be shown in the P&L statement once the coal that is being inventoried now is sold. So at the moment when the inventory levels are declining. Thank you very much. The last question coming from Société Générale. What was the impact of closing positions on the New Jaworzno on the EBITDA of the supply segment in 2020? The impact on EBITDA result is improvement of EBITDA result by a bit more than 100 million PLN. Thank you very much. Let's move on to the next round of questions, this time coming from the Trigon brokerage house analyst. 3 questions coming from that analyst. Do you think that the shifting of coal assets to from the utilities to separate state unities, where the consolidation of utilities listed on the stock market would be going to a single entity? What are your ideas how to reduce the net debt to EBITDA ratio in subsequent quarters? To what minimum level the capex could go down this year in case of major macroeconomic problems? Ladies and gentlemen, with respect to the shifting of mining assets from the utilities to a separate state-owned unit or entity, looking at this question, one should say that such a concept as a coherent concept as of now, we are not familiar with such a concept as of now. With respect to the mining segment, we are trying as of now to focus on our own assets, and here we are taking actions in 2 dimensions. On one hand, we are trying to optimize the operations of those assets. It seems that the first effects of this optimization are already visible. On the other hand, we are trying to implement the TAURON strategic directions with respect to those assets, and in particular towards reducing those assets. Conceptual works underway in this regard. We will not be giving any feedback on concepts that we are not familiar with. What we can assure you of is the fact that we are implementing in this area our strategy. And on one hand, optimization, and on the other hand, verification, market verification of options, opportunities to reduce such assets within our group. With respect to the consolidation of public listed utilities towards a single utility, single company, would be a good idea. One must say, first of all, that as a matter of fact, what is important for the industry is the answer to the issues that are being discussed by the individual companies internally, and definitely some type of a rotation of assets towards, colloquially speaking, to turning individual groups more green would be a good idea. We are talking here about, for instance, the green turn of TAURON Group. It is also worth emphasizing here that we are trying to carry out this project quite effectively. Of course, we have 4 utilities. This is a situation that has had its history. We're talking about 2007, 2008 time frame, and today maybe a question could be raised whether the structure is the correct one. And of course, answering the question whether the consolidation of public listed companies is a good idea or a bad idea, one should raise another question, namely the question, what would be the objective that we'd like to accomplish, or what objective could be achieved as a result of such action from the level of the management board of TAURON Group. For us, the priority for now is to steadfastly implement our strategy. However, the issues related to the consolidation of the industry, these are the issues to be determined at the ownership level. In such a sense, of course, we are open to good ideas. However, as I mentioned, as of today, within our capabilities, we can steadfastly implement the strategy for our group, whereas the consolidation-related issues, these are the decisions up to the owners, so to a large extent beyond our level. An important thing, however, as I mentioned, is irrespective of the configuration, is adaptation of the group or groups, utility groups, electric utility groups, to the mega trends and the EU regulations that are forcing a transition towards renewable energy sources. The idea is how to reduce the net debt to EBITDA ratio in subsequent quarters. That was the next question. And to what minimum level the capex may go down in case of a major macroeconomic problems. Let me start with the latter part of the question. Of course, in terms of capex, we are working intensely on optimizing them. There are certain expenditures that we have to incur. We'll be incurring those expenditures not to bring about any disruptions to the operations of our capital group. However, it's difficult to answer. It may happen in the case of major macroeconomic disruptions. Of course, it all depends upon the magnitude of such disruptions. What's very important is the fact that those capital expenditures are being adjusted to the level at which we can say that capital group is a group with a stable, safe financial position. We have certain ideas and certain projects, as a matter of fact, now, actions that we are taking in order to reduce the net debt to EBITDA ratio. However, at this point in time, I'm not able to give you any more specifics regarding this topic because of the fact that our work is at such a stage where we cannot give you any more precise information. However, once more detailed information is available of major importance for our group, definitely such piece of information will be provided, will be disclosed in a regulatory filing, in a current report. Thank you very much. Ladies and gentlemen, we are receiving many questions regarding the ideas related to the consolidation of the mining sector and the generation sector or coal-fired generation sector. However, it seems to me that Mr. President Grzegorczyk presented our position, our management board presented. So we will not be coming back to those questions. The question from Raiffeisen Capital Management, it seems that these questions have already been answered. The position of our management board has been presented already regarding those questions. However, there's a question regarding the Jaworzno power generating units. Will TAURON be claiming liquidated damages for delaying the Jaworzno project? What would be the consequences of Rafako going bankrupt for TAURON? Our approach is as follows, that with respect to the financial settlement of the construction of this unit, we want to decide and discuss that once this unit has been commissioned. That's why it's difficult for me now to predetermine, to prejudge what the situation will be like with respect to the enforcement of the liquidated damages. Definitely the impact for TAURON Group related to, due to the delay of the commissioning of this unit, are strongly mitigated or reduced. I'm talking about the impact on EBITDA as a result of trading operations, but I think it's too early at this point in time to speak about specific settlements related to this power generating unit because it's not been commissioned yet. Definitely the bankruptcy of Rafako would not be a positive event for TAURON, will not help the completion of this project, but definitely we take this situation into account and we take into account the fact that in such a possibility that in extreme situation we'll have to complete this unit on our own. But for now, as of now, we hope to continue our good cooperation, further good cooperation with Rafako, and we hope that according to their statements, this unit will be commissioned, and all our efforts are focused on commissioning this unit as soon as possible and to make it generate electricity as soon as possible. Thank you very much. We have a question, the following question. Will TAURON claim from the President of Energy Regulatory Office a compensation due to the loss of volumes? We don't have such a direct option to claim such compensation. It's difficult to speak about any legal basis or any other basis to make any claims due to the loss of volumes. But if such an opportunity arises, such an option arises in any of anti-crisis package versions, we'll definitely take it into account whether we have any room for maneuver here, for taking any actions here in this regard. But as of now, we are focusing on the distribution segment to operate in an optimum manner, and we take into account the fact that this loss of volumes will actually take place. This is the effect that's caused to a large degree by the coronavirus pandemic. Thank you very much. A question of a more technical nature. Why, for many years, electricity imports could not go up, and since a year, the imports are rising fast? What has changed technically in the system? I would like to ask Mr. Dariusz Niemiec to answer this question, please. Good afternoon, ladies and gentlemen. First of all, the conditions, let me start with a non-technical condition, but the technical are obvious. The TSO investments in shifting devices, phase shifting devices that enable the increase of capacity transmitted, but there were economic factors. One is because of a change of a method applied by the TSO, methods of determining the allocation of a transmission capability. That was a main issue. The other major factor is commercial. The price difference between German and Polish market in 2019, almost 93% hours were cheaper on the German side versus Polish side. So this led to a very strong pressure to increase imports of electricity, so exporting of electricity from Germany to Poland, plus that method applied by the TSO, plus the phase shifting devices led to this effect, a substantial increase. And we think it will continue to be that way and grow. Thank you. And the last question, I think, related to the heat assets divestment process. What's the progress on this process of today? Ladies and gentlemen, currently we are in the process of a market verification of the ability to divest TAURON Ciepło subsidiary. The potential investors, interested investors, are currently performing the due diligence analysis of the TAURON Ciepło, TAURON Heat subsidiary. Thank you very much. Ladies and gentlemen, I'd like to invite you today already on behalf of the Management Board and my own behalf for our next meeting after we publish the first half earnings report. I hope we are able to meet not only in virtual reality, but also physically in our daily operations. Please contact our investor relations team, and thank you very much for accepting our invitation to today's presentation. Thank you very much.